The last 3 or 4 videos I've been saying I want to get into Tesla and I want to get in somewhere. Well, somewhere's now. Hey folks, LA Little here with TA today, and today I want to talk about Tesla. You know, over the last 3-4 videos I've done about the mega caps, I've talked about Tesla in general, and I've said, hey, the last 3 or 4 videos I've been saying I want to get into Tesla and I want to get in somewhere. Well, somewhere's now. We did it right here. Why did we do it there? Well, we'll go into that here in the video. Let's start on the long end of the chart first though, and show you what I was thinking all along and telling you all along, and that was that this basically looks like kind of a head and shoulders type pattern. In other words, when you have a head and shoulders, you're really talking about levels here, and what they're trying to do is they're trying to take it down, but they can't, right? So you get this kind of a top out face somewhere that creates your head and shoulders the other way, right, which gets you a down move, and you can do all the measurements and all those kinds of things, and then eventually you find a bottom somewhere and the thing starts to turn around. Well, if it does it in such a way that you set up another inverse head and shoulders, which is this had kind of done, you have the potential that when this thing breaks out, right, that's going to lead to a larger move to the upside. Now, as you know, I'm neoclassical, so I don't really believe in the head and shoulders in terms of all the projections and all of that. And although I know some good folks that do that and they do well at it, that's just not my stick. What I do is I look at levels and I look and say to myself, okay, what is this chart doing, right? And I'm going to blow this up because I want to spend a little time on the monthly here. All I'm going to do today is Tesla, so I'll blow this up and we'll take a look at it. What do we have here? Well, to me, there's some equidistant areas. Now, this is a log chart. So when I talk about equidistant, if I draw in a range, right, it's about there, and then if I want to double that up, let's double it up and draw it on top. I want something that captures the vast majority, and so if I bring this up a little bit more and then bring this one up a little bit more, I've pretty much captured the majority of the price action over this period of time, which happens to be about 4.5 years. What does that tell me? Well, it tells me that this is a good representation of what's going on, and it also tells me, and the reason I like to do this, is that this is the key area, right? This area here where you have, the division between the upper and the lower levels. Consider it like, steps going up and steps going down. You've got a step here and you're trying to break through and give the upside. And so when we get over to this part of the chart, what did we do? We got over it here, and then what did they do? They tried to immediately take it back down, but that failed. And what did that create? Well, it created kind of a hammer reversal. So if I take those off, you've got a hammer reversal here. And that hammer reversal led to a push to the upside. Now, this back here was the August swoon, had to do with the Japanese currency crisis. And since then, this stock has simply made it higher. But if you look at it from that perspective, right, that gives you a good feel. And that equidistance, about 85%. So the move from here, this bottom, to that equidistant area is about 85%. And if you double it, it's about another 85% up. And we've just made a move up into here, so there's probably 50% left in terms of how far to go. What else is there in this chart that gives us confidence that this thing's going to try and move higher? Well, the first thing I'd bring your attention to here is this breakout here, right? There's a bearish retest region over here, and you can see that one still in effect. In other words, once it was broken down, which was right on this bar, right, coming back up, it tried to get over it here, was unable, and now it's slowly coming back up to do it again. So that tells you actually it tells you two things. A breakout over this swing point high is going to be critical, because it's not only going to break the swing point high, it's going to tear away this bearish retest region that has held this stock back for almost 4 years. And so that price point is critical. As a matter of fact, you could probably, do your ranges in between those, but I'm not going to try and dissect it that way. So that's one thing that's critical. What's the other thing? Well, there was a break here which says this swing point high was broken over. And what happened? It tried to break it down here, here, and almost there, right, to get lower. In other words, to regenerate to the downside. Not regenerate, but to break the bullish retest regen, and it was unable to. And now what is it doing? It's regenerating to the upside. So you had the testing, and now you're regenerating to the upside. So this tells me, when I look at it, that this particular stock is in a good place, at least on the monthly chart. So if I wrap up that thought here on the monthly, basically you get over the swing point high, you're going to go back to the highs. And so that's where this stock is at. Now the question is can it get there, right? And for that, we'll turn to the weekly. Now if we look at the weekly, you basically have the same story here. I mean, here's a swing point high, right? Draw it over. There's another one there, right? This was a breakout of both of them. Nice spike up, and what does it do? This is the August swoon here. Let me draw them in so we can see them. Let me grab an arrow. So that's the August swoon, right? And this is the swoon that was caused by the cyber reveal. This one, the August one, attempted to break this down. In other words, make it fail, but it didn't. And what did it do? It regenerated to the upside. It tested again and regenerated again to the upside. Now you really wouldn't want another test, right? 2 is enough. 3 is not good, usually. And so that was all very positive. If you look on the other side of it, right, this is a breakdown. That's a bearish retest regen, right? That was taken out right here. And so everything that you look at in terms of testing from a neoclassical perspective is there. And now what do you have? You have a break over this swing point high that broke out right here on this bar this week. And so that's a retest regen, and I wouldn't be surprised to see it get retested, right? Which says we could come back to around 248 or so. But it's going after this swing point high, that swing point high, and that monthly swing point high we've been talking about. Matter of fact, I believe 27898, I believe that is that. No, 299, so it's actually higher. But the point being, if you get over the 299 area, this thing's going back to the top. That top's 410 or so. And so there's a lot to go still. This isn't over. There's still more to go, in my opinion. And so to me, that's what we should be focused on. Let's look at the daily. The daily's really nothing other than you got this big island reversal down here now. But nice volume build up. You go take out a swing point high. So you've basically broken swing point highs on the daily and the weekly, which usually means that you can eventually go higher, if not immediately. Let's look here quickly and wrap this up. Is there anything here that tells us anything on the ABCD projections? And there are, and they're telling us, let me draw that again. They're telling us that these two are in play already. That's 296. 296 is going to get you right at that swing point high. And so those are in play already. If you get over that, look at the projections to the top side. They're huge, right? Where does this one come in? Well, if we go back here and we do those, that division that we did before where we had this, and then we had the one on top of it. Well, if you can imagine 2 more on top of that, right, up here, and then another one up there, that's going to take you to this number. Actually, probably take you over it, probably about 1400. So this is a very bullish chart. It's why I've been watching it, right? I know they're overvalued in terms of how much money they make and everything, but this earnings report that made this huge move, a lot of it was tied to the fact that they've got growth now coming out, not just in their car division, but also in their energy division. And they've got their margins starting to move back to the top side. That's why I got this so bullish. So I like this picture. I like Tesla. I think there's nothing extended. I think it can go a lot higher. That's where we're at. Have a great one. Stay safe. See you next time.